What a time for this panel. Obviously, team, I've timed this to perfection because we've got the Bitcoin gurus coming in talking about where this cycle is going to go and how high can Bitcoin really go. And we've got the best in the business. My socks are wet because I've just done a shoe. I'm not sure if you guys could see that, but we've got up next, we've got Checkmate, one of the best, probably actually, you know what, the best Bitcoin on-chain analyst in the world. He also does some amazing stuff for us at Collective Shift. We've got Adrian Forza, the best crypto tax advisory service in the country. He's been my personal tax accountant for a very long time. He's also in the trenches with us, giving us the insights that we need. And also Tori's back on doing the double up. I was going to say ex-Olympian, current Olympian, building on XRP, building an amazing project there in the sports world. And also Matt, our head research analyst. So I'm going to give it to these guys. What a time. My heart's pumping. 100K, guys. Over to you. How high can we go?
Oh my goodness. You can hear me. Okay, we're on. Sorry, guys. I'm excited. We just hit 100K. Finally. What a great way to start this panel. Like, the timing is immaculate. So we've obviously got an elite panel of analysts here to chat about how high can Bitcoin really go this cycle and where is the top. Now, obviously, everyone sort of listens to a panel like this and they want to hear what the predictions are to the top so we can add that to our speculative trading thesis of when we pull profits and all that sort of stuff, which I think we're going to touch on. But I think the main thing we actually want to touch on today is frameworks of thinking on how we get to a conclusion of where the top is. So that's what we're going to discuss today. So let's just open it up with why Bitcoin? Why is the top? Why is Bitcoin the core indicator in our space? We'll jump straight to, throw it straight to Adrian, if possible.
All right, thank you. I was going to go to James first, but that's all right. I'll start. I'll start from probably the beginning. So I sort of got into Bitcoin back in 2016, 17, and listened to a lot of Andreas Antonopoulos, and sort of fell down that rabbit hole. And he talks about, the 5 pillars of blockchain and them being open, public, borderless, neutral, and censorship resistant. And I think all of those things sort of amalgamated together is what makes Bitcoin special in itself, and what really separates it apart from, sort of crypto in general, and the different projects and products that are on crypto. But I think now that the institutions have actually come in and really recognized Bitcoin as an asset. Obviously, we saw the ETF in January, and it's just elevated itself to a different level now. Obviously, it already was, but I think even further that people have really separated Bitcoin from crypto in itself, especially with the likes of like Michael Saylor, who isn't really a crypto fan, but he's obviously a Bitcoin bull. So I think people should really go back to the basics of what Bitcoin is about and why it is special, and why, not just from a speculative point of view, but why it's important for, I guess, the world and people in general, and why institutions are actually desiring it as well. And I think that's really important for people to understand that, to know what the true value really is, which I think could go as high as, could keep going forever, basically.
Yeah, thank you. And James, have you got anything to add to why Bitcoin is the core?
Yeah, I mean, like tops in, right? 101K. It's got to be over. It's all finished. Well done. No, look, I think the thing with Bitcoin is it's clearly separated itself over many, many years. It's never been challenged for its top spot, in the crypto world. In many ways, Bitcoin has a very special role, in that its job is just simply not to die. And it's doing a tremendous job at doing that. It's the only asset that in this space you can confidently say, I'm going into a coma for 50 years and this thing will still be ticking. And it really comes down to just like the elegance of its design and its incentives. It's super simple. In fact, it's so simple that I often look at much of the rest of the crypto space as it's a thing called second system syndrome, where it looks at something that's so simple and so elegant, it goes, that can't work. And we try to design all this complexity to make it better. And we end up finding that, in fact, that simplicity is what makes it so special and so powerful long term. So I think Bitcoin it really is in a league of its own, and it challenges gold, it challenges bonds, and these are just targets that, the size of these markets is extraordinary and massive. So over the long term, it's certainly closer to that goal than it was even 18 months ago.
Great. And Matt, do you have anything to add to why Bitcoin
Yeah,
runs it
a
all?
lot of what Adrian and Check just touched on, is really, really telling, and I think really speaks to the value of Bitcoin and its lasting power. Really, I also got onboarded into the space similar to Adrian via Andreas Antonopoulos, and learning about all those fundamentals was so important for me to realize how Bitcoin is different and unique compared to, well, all the other cryptocurrencies, yes, but then also the likes of gold and other forms of money as well. So what really drove it home for me is just the I suppose the cryptographically, I guess, secured the guarantee in the sense that like you have that finite supply, whereas something like gold or other forms of store of value that you do see in the quote unquote real world, really there is no really finite supply that's actually known. So that was one thing for me that really brought home the case for why Bitcoin. And yeah, as James just touched on then, it really is in its own league, in my opinion, in compared to the thousands of other cryptocurrencies, which are trying to hit other areas and other use cases ultimately. But yes, a big day, Tori, and looking forward to seeing where Bitcoin goes in the years, decades ahead, to be honest.
Yeah, very exciting indeed. James, can you share what, in a snapshot, your macro view or what led to 100K today? What's led up to this point in the last, I guess, 12 months or the last cycle? And what role do you think institutions will have in pushing the price of Bitcoin higher in time to come?
Great question. So I generally break down the market into different phases. It's driven by who's in the market at that time. So just with really simple numbers, I would argue that pretty much everybody up until the start of this year, it was just people who survived the bear market. All the speculators were gone. It was just people who survived the bear. So we're really talking about the hardcore hodlers. When the ETF started around October, ETFs started to become a bit of a rumor. Then they obviously came to fruition. I think there we saw like an initial burst of, there would have been some traders, there would have been some initial buyers. I also think a lot of those hodlers have said, hey, I've got this retirement money. Now I can put that into Bitcoin too. So I think that was a large portion of it. I would also say that how do we get to 100K? And honestly, it's happened very quickly. Yes, there's like the match that hit the fire, which was the US election. But by and large, that 7-month chop solidation, as I called it, when we hit the all-time high at 73, we had 7 months. And that process redistributes supply. Some people took profits. Others used the ETFs as like a source of exit liquidity. But generally speaking, we saw supply move to stronger and stronger hands. And a lot of those are institutions. And I think something that's really important to understand about institutions, they are patient and they don't just go and hit the market bid. What they do is they sit underneath the price and they allow the market to come to them. They're a much more patient entity and they allow the market to sell to them. Because if you think about it, if you want to put on $1 billion position, you need $1 billion of people to be wrong and sell to you, right? Same is true on the other side. So these folks, these big institutions, they are long, patient players. They know how markets work. They know they go up and down, and they prefer to accumulate on the downside. But at the same time, at we're now $2 trillion, you can't have just the average hodler coming in and moving the price with their monthly income, right? It's much bigger than that now. So without these big institutions, it's also much harder to move Bitcoin. But I want to just caveat that gold added $6 trillion to its market cap this year. So, I mean, Bitcoin's only 2 trillion. So, that's a 3x from here, and that's just gold's gains. So that's kind of the perspective on how quickly these sound money assets can move when the market finally lets go.
Just repeat those numbers, James. I think people just pay attention. Just repeat those numbers of the gold appreciation this year.
Yeah, I mean, so gold added $6 trillion to its market cap this year, right? From like, you can measure at any particular point you want, 6 trillion. Bitcoin so it's added 3 Bitcoins, right? Just in 12 months. So if you look at, I'll get the numbers wrong, but if you just take Bitcoin and apply it to gold's gain, just the gain, it's like $350,000 a coin, right? So it's a serious growth potential. And at the end of the day, my price target, I know this is kind of answering the question from further away. My price target is 10.8 kilograms of gold, which is parity. And that's my base case. That's where we're going. It'll take a long time, but we'll get there. After that, I mean, as an absolutely scarce asset, I mean, this thing, there's no limit on where this thing can go.
Perfect. Well, thanks for segueing right into the next question, predictions. So can we get around the table to everyone? What's your prediction this cycle, and how have you framed your thinking to get to that conclusion? So we'll start with you, James, to follow on from what you just...
I mean, I'm looking at my block clock right now. We're at 103,000. So by the time I finish this, I could be wrong. Look, you have to remember that there's going to be many tops. And when a lot of people say, "Oh, where's the cycle top?" they're probably talking about like the absolute zenith apex where we go to a 4-year bear market. I would go into this cycle with a different approach. I think that everyone has to be flexible. If there's ever a time for this 4-year cycle to break down, these are the conditions where it happens. Simultaneously, until that 4-year cycle breaks down, it probably will keep working. So you kind of got to hold both views at the same time. Now, there will be many tops, right? You could argue we're in a 16-year super cycle and there's been no top. But of course, that's not how people really think. We live on the daily chart. My current instinct is that whatever this move that we're in the process of doing right now, we will get up into probably 120, 130, 150, somewhere in that ballpark. And that is really where we're going to see a lot of people, right? Because you got to remember that as Bitcoin gets bigger, as price goes higher, more Bitcoiners need their life financed, right? They're going to want to buy cars. They're going to want to buy a house. They're going to want to put their kids through school. There's all sorts of reasons why hodlers will start to take some chips off the table. I would expect that somewhere in that 120 to 150 range, obviously the higher up we go, the more these things start to come into play. That's really where the average hodler is really quite profitable. And we, historically speaking, will start to see some chips come off the table. Now, will that be the top or will that be a top? The truth is no one knows in advance, but certainly I would expect the market to cool down, right? It accelerates into it, but I expect it would probably cool down from there. Does that mean that I'm like, hey, Bitcoin's over? Of course not, right? 10.8 kilograms of gold is substantially higher than that, but it takes time, right? So just bear in mind there'll be many tops, and trying to identify what top matters to you is probably more important than trying to pick the top, right? Which top actually matters to you.
Excellent points. Matt, you got anything to add to that?
I think, yeah,
What's your prediction?
reiterating what price target matters to you is important. In terms of 2025, as I said on an earlier panel, I do expect next year to be, a continuation of the bull market for the broader crypto market, and of course led by Bitcoin. Personally, I'm expecting us to get up to the high 100,000, so up around 180,000. That is around where I'm aiming, where I can see us sort of topping out. But of course, like Checkmate and even Adrian, I do have a very longer term multi-cycle view of Bitcoin. Personally, for my own goals, I may be taking some profits in BTC, but I plan to hold like the vast majority of it, multiple cycles. The one sort of variable I will point out in terms of where we get to next year as a ceiling, the one most important variable I'm watching is what actually happens with the Trump administration and their promises towards Bitcoin and the broader crypto industry. In particular, will we see a Bitcoin Reserve Act passed? Polymarket, which was very popular prediction market heading into the elections, as I'm sure many of you would know, Polymarket actually has it a lot higher than what I thought in terms of the odds of a Bitcoin Reserve Act being passed in the first 100 days of Trump's after his inauguration on January 20th. So what does that mean? If that Bitcoin Reserve Act gets passed, it will mean that the US government will start to stack sats essentially, or start to accumulate up to 5% of the the total supply of Bitcoin over a very extended time frame. I think it was 5 years from memory. So it's regardless, the numbers even aren't so that important in a sense. I think it's more so the message and legitimization it would have for Bitcoin, the fact that the US government would be accumulating. But Polymarket actually has it at a 24% chance of that being approved, that bill, in the first 100 days of Trump's presidency. I don't think that's going to happen, but I would love to be proven wrong. If that does get approved, my targets for next year would go significantly higher. So that's the one variable I'm watching for next year.
Great. Thanks, Matt. And Adrian, what's your prediction this cycle?
I'm a little bit different, actually. I don't really have a price target, to be honest. And that's just because I think, obviously, now that we've hit 100 and, I guess in the last bull run, in 2021, it was, 100, 120, I was probably guessing. Now that how the market's played out, and like Checkmate was saying before, there was that consolidation between, say, April and November or so, where I think a lot of institutions were actually buying, and but in terms of like the long term, or say this cycle, I haven't really given it much thought, and because for me personally, right now, I'm not really in a position where I need to sell my Bitcoin, and so, but there are people out there that might be completely exposed to their Bitcoin, and this is also a problem where I see it in clients where it's sort of like everything or nothing, and some people are all in Bitcoin, some people are all in altcoins, or they don't have any cash for reserves. So those, like what Checkmate was saying before, that some of those people might be in a position where if they have made life-changing money, then they need to start to take some chips off the table. Now, again, there's that argument around, okay, well, fiat versus BTC. Right now, BTC is still speculative, right? It's still not proven to be, a hard asset in terms of its longevity, like say gold is. Obviously that's going to change over time, but I think people need to realize that, if you have made life-changing money, take some chips off the table. Now, I would never sell all of my Bitcoin unless something catastrophic happened. Bitcoin code was changed or hacked or whatever it might be. But for me personally, I don't really have a target. I think as time goes on and BTC proves itself as a hard asset, I don't think there is any real price target that you could put on it specifically. But some people just need to realize that taking some chips off the table and also just feeling good about it as well, because crypto markets they're stressful. Bull markets are stressful. In a bear market, you're not really stressed because you're not watching the price all the time. So you just need to de-stress yourself as well about it, and then take some money off the table and say, okay, I've got something to show for this. This is what I can use to go on a holiday or buy a new car or pay off my house, because people have got different goals. Some people might have a $500,000 or $1 million mortgage that they just want to pay off their house. They're debt free. They keep a little Bitcoin as well, and then just sort of continue to grow. So I know I didn't really give it a price target. I just think it could go up basically forever, as long as, and I've always said this, as long as world markets don't collapse or there's a major black swan or whatever it might be. I don't really see a target for Bitcoin in the future. I think it'll just continue to grow slowly, and we're not gonna have those 80% dips anymore. Obviously, of course, we're gonna have 20 or 30% or 40% dips, but I think that 80% dip and maybe even the 4-year cycle might start going out the window.
Great. Thanks, Adrian, for sharing that. Matt, are there any specific on-chain metrics or external factors that can signal when Bitcoin is overvalued or hitting one of the tops that we talk about?
Yeah, work closely with a particular gentleman in this call right now who has specialized in on-chain analysis over the years, and I think by osmosis I've learned a lot of the high signal on-chain metrics. But Checkmate, I might hand over to you to go through things like NUPL or NUPL, net unrealized profit or loss, and then like things like moving MVRV as well. Maybe just break down.
I don't know what you're talking about, mate. I don't know any of these
yeah.
things.
All right. Okay.
Yeah.
Surely not.
Yeah, look, I mean, generally speaking, right, I like to boil it down to the most simple mechanic, which is what actually creates a top. It's sellers, right? So you then kind of reverse engineer the problem and say, well, I'm kind of looking for two things. I want to see when there's a lot of sellers and demand starts to reach exhaustion. So, really, really simply, what drives human beings to take profit? It's when they've got a really nice, fat, healthy green number in their portfolio, and they go, "Wow, that's a pretty big number, right?" And that's it. You can imagine it, right? Wind your own portfolio up higher and higher and higher. Depends where you are in your life. Some people are closer to retirement. Some people are still in accumulation mode. There is a number that you're going to go, I mean, it's just too big, right? I could do so much. I could be completely debt free. I could buy a house, for a fraction of my holdings, whatever it is. There is a number for every hodler. And it's important to remember that just because it's not your number doesn't mean it isn't somebody else's number. Now, coming into the on-chain world, because we can see when all these coins were accumulated, we can essentially see where their cost basis is. So we can measure in aggregate when different groups of the market are in a large amount of profit. So Matt mentioned MVRV. There's a bunch of different variants. We can look at people who recently bought. We can look at people who bought many years ago. We can break it down to all these different categories. But this is telling you the unrealized profit. So when MVRV is very high, the way to interpret that is going, okay, historically speaking, when MVRV is at like 3 or 4, it usually tops out. Why? Because the average coin, including everybody, is up like 300, 400%. That is the level where people start to take profit. Now, what's really important to know is that that is a implied event. We look at it, we go, we know they're up, but are they actually selling? Usually they do, but are they actually selling? And that's where you bring in things like realized profit or SOPA. And these metrics are kind of the inverse. It says not what people are holding, not the unrealized profit. The unrealized profit is very useful because you're like, that's the incentive. But are they acting on that incentive? So let's just imagine a world where the market rips higher and MVRV is extremely high. We know everyone's really in profit, but if no one's selling, it keeps going, right? So when you kind of look at this confluence, are they really up on their position and are they starting to take those profits? There's only so long any market can run before eventually demand exhausts and you get too much sell side. And you got to remember, when the people who've bought their coins 3, 4, 5, 7 years ago, when they start selling large chunks of coin, who are they selling it to? People who probably learnt about Bitcoin because it broke above 100,000 and they see it on the media, right? So you've got this transfer of wealth from the very, very high conviction smart money to the not so high conviction, not so smart money. And when you've got a market saturated with those folks, that's where you create natural sellers when the market starts to cave in. So, all markets go up and down in non-straight lines. We're just trying to look for that point when too many people are taking too many profits and too many people buy too many coins at too high of a price.
See, great. Thanks, James. Adrian, you touched before that you don't necessarily have a prediction for this cycle. Considering that, it seems like a lesson you could share to viewers. Is there any other lessons that can be shared that you'd recommend to people this cycle compared to last cycle and how your thinking has changed?
Yeah, I think first and foremost, don't get shaken out, because especially for new investors, it's exciting. Like crypto is so exciting. Everyone gets sucked in. Every client that I speak to, whether they're especially people that might have only come into crypto over the last year or two, are just excited about this, that, and the other, and the price, and what's happening, and you become obsessed with it almost. So, and I think when you see these drops in prices, Bitcoin drops 20%, and people start panic selling, and then trying to be a trader. Obviously, in my industry, being an accountant in crypto specifically, I see what clients actually do. So a lot of people, see what people are talking about on Twitter or Facebook and that sort of thing, but I see what actually people do at the end of the day. So a lot of people, what they do is they overtrade. Number one, they don't have enough Bitcoin because they're looking for that speculative 5-10x gain in a week, and obviously that is there. You've got your meme coins and whatever else, but there's been so many people over the years or clients over the years that have said, if I just had held Bitcoin, I would have done better. And obviously that's not always true, but especially for people that are newer in the market, to try and time the market is very difficult. I've always said that having BTC in your portfolio, to not have BTC in your portfolio is riskier than to have it in your portfolio. I would never short Bitcoin because, again, like right now, we've just blasted through 100,000, gone to 103,000 straight away. There was obviously a big sell wall there, and I think people need to realize that dollar cost averaging as well does work. because you're sort of spreading your risk over a period of time, and with that, clients always talk to me about, well, should I buy this? Should I buy that? And it's just trying to take the emotion out of it as well, and not setting unrealistic targets, but also not changing the goalposts as well, because a coin might go to $5 and say, oh, I'll just wait, and the momentum's there. And I've always said to clients, when you think you're a genius and you're dancing around, that's time to take money off the table, because if you're thinking that's good, it's going to go up forever, you're probably a few days away from it dropping significantly, which is sort of what happened with Ripple just a few days ago. It'd gone up your 4x, and now it's come back, I think, a 30% drop. So it's trying to stay level-headed as much as possible. Have fun with it, but don't get too shaken out. Don't think that you're a genius. Just try and stay in between those two gaps if you can. And obviously the guys at with Collective Shift, there's always like-minded people to speak to who have been in the cycles for a while that understand crypto. I've always said, you need to get burnt in crypto once to learn, and then you can use that, moving forward to help you make better decisions.
Excellent. Thanks, Adrian. And Matt, have you got any lessons to add from past cycles as well?
Yeah, the big one for me is, well, always having Bitcoin, which is something I have always had. I think in the bear market, in hindsight, is 2020, of course, but you do need to learn these mistakes the hard way often for it to set in. Is always having the Bitcoin, but then remembering to either accumulate or sell altcoins back into Bitcoin, knowing that ultimately altcoins are a lot of talk, a lot of promises, whereas Bitcoin, the product market fit, if you want to put it that way, or the actual value proposition is widely understood and only getting stronger, in my opinion. So I guess in recent bear markets, the last two, I have regretted not putting more of my altcoins or selling more of my altcoins quicker and putting them into Bitcoin. So again, it just comes back to your goals, whether anyone watching wants to take on my learnings there. But I would also just like to quickly plug, before I forget, checkonchain.com. So that is Checkmate's Bitcoin on-chain analysis website with a lot of great dashboards, and also some macro dashboards as well to help everyone just navigate this cycle, really. Seeing that come from the ground up, really, Checkmate. So you've done a great job with that. And yeah, the website again for anyone is checkonchain.com.
Excellent. And thank you. So James, following on from that, I'll point this last question to you. So obviously you touched on comparing the price of Bitcoin to value of gold. How do you think about Bitcoin's long-term value? And another thing I want to add to that too, just as a side sort of question to it, how much does, I guess, lack of confidence in the global economy and the way things currently are impact the price of Bitcoin as well?
Yeah, I think the thing to know about Bitcoin is it is now a macro asset, quite clearly. And I would even go one step further and say it's now becoming an index on the world. In many ways, when if you're on a Sunday night and something happens in the world, you see some headline. I even see TradFi folks who've been disparaging Bitcoin for years. They'll go to the Bitcoin price to be like, is this good or bad? And what are they actually doing? They're going to see whether their stock portfolios are going to get minced on Monday morning, right? Bitcoin is now becoming an asset that tells us information about the world. And what I think is really key, if you really look at it like objectively, how many assets trade in every fiat currency globally? There's probably only 3, maybe 4. Gold and silver. Silver's probably even less, probably likely, but certainly gold, the US dollar, and Bitcoin. They're really the only 3 assets that every single fiat currency has an exchange pair with. Now, what's really interesting about that, if you look at the US stock market, US stocks are probably going to be impacted by US things, right? If some policy comes out, then it's going to affect US stocks. If something affects, arguably US stocks are probably the biggest ones, but in Australia, no one cares about Australian stocks except Australians and maybe some gold miners, right? Gold investors. They're kind of the only people who really care that Australia even has a stock market. Bitcoin, on the other hand, it is affected by every currency and every trader and every investor everywhere in the world all the time. And because of that, no one country could control what's going on. Yes, you can put capital on one side of the book, but someone else can come in and put capital on the other side. So in many ways, Bitcoin, to me, it is an end game asset. It's going to be very, very hard. I mean, like for me personally, my goal is actually not to sell my Bitcoin. I plan to trade a little bit of it to get into the housing market because that's what I'm saving for. That's what matters to me. But I want to hold as much as I possibly can for as long as possible, because to me, it is an end game asset. We're in a very unique point in time where we get to actually watch this thing growing up. This is a privilege that most people don't have. So I think, in that regard, it is busted through the barrier now. It's beyond the event horizon. And I would agree with what Adrian was saying. You really don't want to be letting go of too much. Everything else, you can trade around the edges. But at the end of the day, those who have the Bitcoin at the end of this kind of general monetization pathway, I just think there's no kind of ceiling on this thing over the macro long term.
Excellent. Thank you, James. Now, I believe we've got 5 minutes for question and answers. Is that right, Matt? No? Great.
Yeah, probably got
Cool.
7 or 8 minutes.
Oh, we got a bit. Okay, great. Well, we got 2 questions here. So the first one is for James. So this is from Dan. Do you use Bitcoin dominance as part of your analysis when looking for an entry point into buying more Bitcoin?
I don't, because Bitcoin dominance in many ways is not describing anything to do with Bitcoin. It's describing what's going on with everything else. And I'm not particularly interested in everything else. I'm kind of interested in Bitcoin. So no, I don't particularly use it. I do think there's something there, although I do think you have to correct it. You've got to remove things like stable coins, and stable coins are now 100. I haven't even checked the number. I think it's like probably over 150 billion. It's massive. I know Tether's like 135. So if you look at stable coins, a 60% dominance today is not the same as 60% dominance in 2017. It's actually closer to probably like 70 or 80%. Because when you extract out stable coins, really they're kind of the dollar, right? They're euro dollars. You should actually probably think about them more in the sense of fiat, right? In terms of they are part of the US dollar system. So I do think that you need to separate those out. So dominance in 2017 is different to dominance today, where 60% today is probably like 70% back in the day. And I think when you just take a big picture look, the fact that Bitcoin got to 60, 70% dominance after more than a decade and billions and billions of dollars of investment tells you more about the 30% than it does about the 70.
Great, thank you. And next question is from Steve, and this is directed to everyone, so feel free to jump in with an answer. What does everyone see happening with the Bitcoin price in the bear market now that private institutions are involved?
I mean, I can throw out some initial points. My gut feel, I think, Adrian, you mentioned before, I do expect like shallower drawdowns. I think that's probably part of the factor. With one kind of caveat, here's like an anecdote for people to carry with them. The bull market will author the bear that follows. If you have a vertical line that just goes up to $1 million, then yeah, we can probably have a 90% back down to 100. If we have a slow and steady grind higher, which I would actually say we are in, that is much more sustainable and price targets can continue to lift. So, you can kind of think about it, the bull market, if it's super aggressive to the upside, your downside will be probably more savage and vice versa. Now, with the big institutions, they are going to rebalance. So they're going to sell on the way up to bring a 1% portfolio that's gone to 2 back to 1. They will eventually probably say, hey, we should probably not be selling this winner and all the rest of it. But they will also buy on the downside. Let's say they buy a position and their portfolio goes from 1% to 0.7%, then they will top it back up to 1%. So all of this is going to start putting demand on both sides, creates deeper and more liquid books at all times, which means bigger people, bigger entities can put more money in. This thing is like a self-perpetuating liquidity monster. And yeah, I think there will be lesser drawdowns, but we're also going to have pretty volatile events, right? You've got options on one side, which are going to create volatility sometimes and extract it at others. So it's going to get very interesting and certainly very dynamic.
Great, thank you.
We got
Matt,
about 30 seconds left.
30
Tori.
seconds.
But yeah, but that was a really great answer. Nothing too much else to add. But yeah, we'll wrap things up, Tori. Just in terms of like where we can get in touch with everyone, I'll de facto just moderator for a second. Tori, where can people find you online?
All right. You can find me on.
Oh, you glitched out a bit there, but Tori West, Google her. Her things are on the agenda. Her
Instagram,
contact details.
and my company is Equil Labs.
Lovely, Equal Labs. Thanks. And Adrian, Crypto Tax Australia.
Yeah, you could just go to our website, cryptotax.com.au or cryptotaxoz.com.au, and just or give us a call on our website to our office. Obviously.
Cool. James.
Yep. So you'll find me over at checkonchain.com. We've got a charting website. All the charts are free and a newsletter. So hope to see you over there.
All right, that's all good. It is Ben.
Amazing. Guys, thank you so much. What a time. How high could Bitcoin go? I think we're at 103,000 already. So back to the charts team. Thank you so much again. And make sure you check out these guys online. They're absolutely fantastic. So thank you so much, team. We'll see you soon.
Beautiful. Thank you.
Good on you, folks. Cheers.